Now, at least according to my YouTube analytics, if you're watching this video right now, you're probably either in your 20s or your 30s, and you're more or less interested in building a long-term dividend growth portfolio full of dividend growth ETFs like SCHD or another popular one that I love, DGRO. But maybe you're still in the early days of your dividend growth investing career and you're not necessarily sure on which dividend growth ETF you want to make up most of your portfolio. Well, in this video, I'm going to share with you exactly which dividend growth ETF between DGRO and SCHD might be the perfect dividend growth ETF for those of you that are in your 30s and want to build a long-term portfolio that's not only going to grow over time, but also pay you dividends and more dividends long-term. Well, in this video, we're going to dig into both DGRO and SCHD and see out of these two, which are two of the most popular and two of my favorite dividend growth ETFs across the entire market, see which might be a better candidate, a better fit for your specific portfolio. So if you're a dividend growth investor interested in high quality dividend growth ETFs, make sure to stick around, drop a like down below, and let's get right into this one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first, just to lay some groundwork, let's dig into both DGRO, the iShares Core Dividend Growth ETF, one of the most popular dividend growth ETFs across the entire market. And then after that, we're also going to look into SCHD. So first off, right here on the iShares website, it says right at the top, why DGRO? It says number one, DGRO offers low cost exposure to US stocks focused on dividend growth. Number two, access companies that have a history of sustained dividend growth and that are broadly diversified across industries. And number three, use at the core of your portfolio to seek income. The objective is pretty simple also. It says the iShares Core Dividend Growth ETF seeks to track the investment results of an index composed of US equities with a history of consistently growing dividends. Now, SCHD on the other hand, although there's lots of similarities, both these ETFs still are different in some ways. For the Schwab US Dividend Equity ETF, this objective is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index, and the highlights are a straightforward low-cost fund, just like a DGRO, and offering potential tax efficiency. The fund can serve as part of the core or complement in a diversified portfolio, tracks an index focused on quality and sustainability of dividends, and invests in stocks selected for fundamental strength relative to their peers and based on financial ratios. Now, before we go into both DGRO's performance over time, look at their dividends, all the fun stuff, etc., let's look into some of the top holdings in both these ETFs just as of right now, just to sort of paint a picture once again and try to answer the question which of these ETFs might be a better fit for your personal portfolio. Now, this right here is DGRO's top 10 holdings. There's names like Johnson & Johnson, we have ExxonMobil, JP Morgan, abbvie, then we have names like Apple, Microsoft, Chevron, Procter & Gamble, Broadcom, and Home Depot. Now, across this top 10 list, all these different names over time have paid dividends and also raised their dividends over time, but there's even a specific few names in here that have also grown like crazy, which is going to give DGRO potentially some massive upside later on. I'm talking about names like Microsoft, Apple, and others. Now, it's also important to mention that there's 417 different stocks in DGRO versus the 100 stocks that are currently throughout SCHD, and the top names being things like Lockheed Martin, abbvie, BlackRock, Coca-Cola, Amgen, Home Depot, Bristol-Myers, Cisco, we have Pepsi, and Texas Instruments. Now, although there are names in SCHD that also have grown like crazy over time, there isn't necessarily as high beta names compared to something like Microsoft or Apple. But all in all, these names also, the top names in SCHD as of right now, have also grown over time for the most part, paid dividends and paid more and more dividends over time. Which now, looking at both of these ETFs, it makes sense on why they're so popular, because they track some of the highest quality stocks across the entire markets. So now that we went through some of the basics on both these ETFs, we looked through the top holdings in both these ETFs, looking a little bit deeper into both of them, comparing some more things that might be similar and or different. As far as expense ratio goes, they are both very cheap to hold on to, although DGRO has an expense ratio of 0.08%, where SCHD's is just 0.06, so that is going to be a small difference. You are going to have to pay a tiny bit more to hold on to this one. Now, as far as price return goes, DGRO is up around 12.7% on the 1 year, SCHD is up around 7.8%. On the max time frame though, SCHD is up around 214% since around 2011. DGRO, although it has not been trading as long as SCHD, this ETF is up around 130%. Both these ETFs for the most part have traded up into the right, and like I said time and time before, have been paying dividends and more dividends historically. So as far as price return goes, honestly, comparing these two, although SCHD has traded up into the right historically, I still think because DGRO does have some exposure to names like Apple, Microsoft, I think that when tech is generally moving up, when we're in a bull market, I think DGRO has a slight edge on SCHD with some more upside when it comes to growth potential. But when it comes to comparing dividends and dividend growth, SCHD does have DGRO beat as far as the starting yield. We're talking a 3.5% yield when it comes to SCHD, and DGRO has around a 2.3%. So you are getting about 30% more dividend from day one when it comes to SCHD, but historically over time, DGRO has also raised their dividend, giving this ETF a nice dividend growth rate, just like that of SCHD. But if we were to compare the last 5 years, the dividend growth rate for SCHD is around 12.8%, where DGRO's is around 9.3%. Now again, because I personally think that DGRO has more upside as far as price return goes, the fact that it pays a smaller dividend slightly than that of SCHD, and even if it maybe has a bit of a slower dividend growth rate, I still think long term, if you were to ask me the truth, I still think DGRO might have a chance of outperforming SCHD over the next decade or so. Now that being said, for those dividend growth investors out there that want some exposure to some more cash flow from day one, SCHD is going to give you a bit more cash flow with that 3.6% starting yield. But either way, both of these ETFs have paid more and more cash flow to investors long term, which makes them both awesome dividend growth investments if you ask me. Now lastly, we were to compare the performance as far as total return goes, which is price return plus dividends included, and if we were to have invested $10,000 into both these ETFs, SCHD and DGRO, and this is back in 2014 because this is when DGRO started. SCHD of course has been trading for a little bit longer, but that $10,000 over the last 10.17 years would have turned into around $29,293 with SCHD, or just over $30,000 with DGRO, or around 11.15% average annual return with SCHD, or around 11.45% with DGRO. Now, because both these ETFs are pretty much neck and neck as far as total return goes, that's another reason to really believe that either way, investors will probably be good long term if they're of course seeking a positive total return of somewhere between 8 to 12% every single year. But my main takeaway overall, if you were to compare both DGRO and SCHD, especially if you're in your 30s or if you're a relatively younger investor that has a lot of time frame ahead of you, a lot of years to compound your portfolio, either one of these dividend growth ETFs are probably going to be just a fine fit in your portfolio. But if you want a little bit more exposure to growth potential, DGRO might be the one. If you want a little bit more exposure to dividends from day one, SCHD might be the fit. Or if you're like me and you just can't choose, and if you don't mind having some overlap and some underlying holdings, holding onto DGRO and SCHD at the same time in your portfolio, well, that's always okay also. But the bigger picture idea is that investing into high quality dividend growth style ETFs like these ones and building out a foundational position in your portfolio, having these ETFs sort of be the foundation, the concrete that's going to hold the rest of your portfolio up no matter what happens, that's ideally what dividend growth investors should do in the early days, and that's especially until they sort of understand how the stock market works, etc. But now lastly, most importantly, I want to ask you guys down below, if you were to have to choose between DGRO and SCHD, and if for some reason you could only buy one of these two as a long-term buy and hold position, which one are you choosing? Leave the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.